Hi, this is Acme with the Bulletin board heroes here at Zach's Traders Cafe for Monday, the 20th of May. Starting off with the FTSE 100, which is looking very rested after the weekend with this little bull flag between 8,400 and 84.70.80, which was obviously the all-time high. We are still looking for that 8,500 level, which is the top of the 2007 rising trend channel, but actually maybe it's time to look for a little bit more than that, especially while we're above 8,400. We could be in a rising trend channel from back in March. The red channel there, that's heading for 88.20, which could be the target for the end of next month. On the downside, still fearing 82.20.30 at some point, even if we're in this steeper channel that I've developed over the weekend. But ideally, we break 8,500 and head to 88.20 by the end of next month. Moving on to the DAX, and here you can see that we are consolidating well at and above old resistance, which is normally a very good sign, above 18,600, looking for the top of that rising trend channel from October as high as 19,400 now. On the downside, the worst case, I suppose, is 18,200, which is near the 50-day line and the late April resistance. Moving along to the Dow, and here the picture, a decent one in the sense, obviously we had our close over 40,000 and looking for the top of that channel there, 41,300 by the end of next month. Bear trap island reversal, so gapping down and then back in April and then gapping up for the start of May. If there is a rug pull, the worst we're expecting here is the 50-day line, 38,800. Just a quick re-look at gold, and here obviously finished well on Friday, looking for this to head up to the top of that rising trend channel from back at the end of January 26-25, perhaps as soon as the end of next month. Just thought I'd take a look at copper as well, given the way that that seems to be the market in the news at the moment. And here you can see that the situation is, well, say it's an exponential rise, but a pretty decent one here. Here we've got the rising trend channel from back in February. The parameters of the channel, probably as I'm drawing them now, so looking for this market to head perhaps as high as the 540 area, which is the February resistance line projection, looking for that by the end of next month or even sooner. What a great move after a long time of asking for copper bulls. Onto the stocks, and a stock which has risen, I think it's basically doubled since the course of the beginning of last month. Asiamet Resources, we've been looking for 1.75 by the end of next month, I suppose. But the way things are going, we could even get that by the end of this month. We're lucky. Obviously, we've got that resistance there from back in August last year, 1.625. So let's see if we can take out that and get to the 1 3/4 area over coming weeks. The only thing that would sort of delay or kill the idea of ongoing recovery would be a break back below the 1.4 pence area, which was one of the old resistance points in April last year. Onto a stock which I've never looked at before, which is Arecor, and too good to resist this one actually, with the bear trap rebound from below the April support there, 128, and then a gap up. So it's a bear trap island reversal, so gapping down and then gapping up. That suggests that the bears have been caught with the trousers down, and we're looking for £1.55 at the top of that broadening triangle from February as soon as the end of this month. And obviously the way things are going, we could even get that by the end of this month, given the way that the 50-day line is now rising too. So we've got everything we like there, including bullish divergence, uptrend line from March in the RSI window, lower lows for the price but higher RSI trace. So all the boxes ticked there at the moment. Another beneficiary of the commodities price boom is Bluebird Merchant Ventures, and here we hit our first target there, just around the 1 penny level. Above that we were looking for the red line up to 1.5 pence, and I suppose now may be worth considering what the next destination could be. That could be along the lines of that line there that I've just drawn, up to 2.5 pence, perhaps as soon as the end of next month, given the way that this has been a situation where we've gapped off the lows and also have a golden cross to celebrate to start this week. So this stage only back below 105, really, the initial May resistance delaying the idea of a move to 1.5 pence imminently and then later up to 2.5 pence. Moving along to Cavendish, which is not only a posh sounding name but has also hit our target there. Bear trap gap reversal there at the beginning of April, and above 13 pence we're looking for as high as 18 pence by the end of next month, which would fill that end of 2022 gap down that the shares had, and obviously be quite a win. We've got the 50 and 200 day lines both rising as well, so decent situation there, even though perhaps the sector is not the one that most people would be thinking of at the moment, despite the FTSE at record highs. Moving on to Cobra, which had, I believe, a presentation on Friday. I was not hungry enough to attend, but here we've got a rising trend channel base, top of the channel there at 1.5 pence. Above that, looking for 2 pence as soon as the end of next month. Ideally, we stay on the right side of the 50 and 200 day moving averages at 1.05, which it looks as though we will, barring any surprise fundraisers. Moving on to CT Automotive, which is gapped up today above a rising 200 day line. That's at 59 pence. Initial target here was up to 76 pence, and best case would be up to £1 as soon as the end of next month, the upper parallel of that rising trend channel base. One of the favourites here in the recent past has been Faron, largely because the shares have done what we wanted them to do. First target there 160, second one 203, and then the third target, which took a little bit longer than what one would have liked, up to £2.83. End of day close about 283, and we've got a fresh target there for the end of next month as high as £3.80, which would be quite an achievement. Ideally, we stay now on the right side of the 200 day line there at £2.51, ahead of a potential blowout move to £3.80. Another stock which has delivered the goods, one of the many, I suppose, in this selection, is Frontier Developments. And here we've got looks like a mid-move consolidation after the breakthrough the 200-day moving average at £2.30. Our second target here up to £3.31. That was after the first target around 205. And then the best case would be up to £4.20 by the end of next month at the upper parallel of that rising trend channel base. Ideally, no price action now below £2.70. Moving on to Greatland Gold, where I suppose the pleasure that one gets from seeing the shares actually rebound properly for a change is endless. Here we've had the shares hit our initial target there, 7.5 pence above that. We were looking for 9 pence, and hopefully we'll get that by the end of this month. If you're a fan of the shares and long-suffering fan of the shares and looking for greater glories, then the next level up would be up to 11.3 pence by the end of next month, which I think the shares could do given the speed and the momentum behind that turnaround that we've had. But the key here, holding above that 7.5 pence area. Moving on to Itaconix, which I was trying not to look at today, but as the shares have gapped up, it's a bear trap gap reversal. Initial target here, the 50-day moving average at £1.81, which we're looking for by the end of next month. Ideally, we stay on the right side of the gap floor there at £1.40. The only thing missing, I suppose, is that we want to see an end-of-day close back above the RSI 50 level versus 49.7 at the moment, but we are nearly there. Another stock which is giving the bulls a bit of joy today is Jubilee Metals, and here at a rising trend channel base, initial target here 6 3/4. Next one was 8 pence, and the one after that, which was the best case scenario target, 9.3 pence. Hopefully we'll get that over the next few days. If you're a fan of the shares again, then you'd be looking for up to 11.4 pence to fill that gap down that we had February last year at 11.4 pence, and ideally we get that by the end of next month. Key here though is staying above 8 pence. Just going on to Keyword Studios, which obviously had that bid approach, etc., etc. What's interesting here is that we had, well, one of the rules in my charting book, which I wrote about a decade ago, was that very often before a bid, you see the shares of the target company hit a new low 4 to 6 weeks before the announcement, and that's exactly what we had with keywords. And the rationale behind that is that the market, in its infinite wisdom, likes to prevent people being in a takeover stock by accident, so shuffles out the weak hands 4 to 6 weeks before a bid. And obviously, as you can see there, maybe 1 or 2 people guessed that there was something going on, given the blue candles that we've had in the shares day in, day out for the last couple of weeks. Moving on to a less sort of exciting situation perhaps so far, but Mosman Oil and Gas doing well at the moment through the 200-day line again at 0.19, let's say, and consolidating well above that rising 50-day line. We've been looking for 0.33 for quite some time. Hopefully we'll get that now by the end of next month, especially given the new revitalized price action. It's also evident that we've had 2 bounces of the RSI above neutral 50, which tends to be a decent momentum signal on the upside. So 0.33 by the end of next month, while we're on the right side of that 200-day line, 0.19. On to the last 3. First one is SDI, and here, beautiful looking chart with the broadening triangle base, looking for the 200-day line, and the top of that triangle at 84 pence, perhaps by the end of this month, and ideally there's no price action back below the initial April resistance, 63, so above 63, looking for 84. If you're a fan of the shares and looking for greater upside, then probably we could pencil in up as high as £1.15 by the end of June, if this is the big turnaround that the shares are currently promising. Bullish divergence there as well, so looking pretty strong. On to Thor Exploration, which I see on Twitter has some high-profile backing at the moment. Here we had a key reversal to the upside on Friday through the 200-day line, and good follow-through today. Our initial target here was 18 pence, which hopefully we'll get well before the end of this month. By the end of next month, we're looking at 21 or 22 pence, with the upper parallel of that broadening triangle from back in the autumn. Ideally, we stay on the right side of 14 pence and the 50-day line. In the meantime, we've already had a double bounce off RSI 50, so this does look like it's a strong situation technically. Finishing off with United Oil and Gas, which finally looks as though it's stepping up a gear in terms of potential revival. Broadening triangle base. Basically, we're looking for the shares to fill that gap up to 0.32 by the end of next month, and the longer they stay above recent support at the 0.17 level, the greater the chance of a move to 0.32 over coming weeks. That's it for me today. More updates tomorrow.